get over to Simon Michell from FIIG Securities for a bit of a preview and his take on what to expect today. And Simon, how important will this data be for fixed income investors?
Yeah, morning, Kate. Very important. We had a very quiet session yesterday as the market awaited this data. As you suggest there, the RBA is quite comfortable for this rate to move up, so no real surprises. We'll be looking at the split between full-time and part-time job growth. But it does play into consumer confidence, and we've seen some soft consumer confidence data recently. People obviously watch that increasing unemployment rate, they get a little bit more nervous. That slows consumer spending. So there are some bigger issues at here, and why it is an important piece of information out today.
And Simon, overnight we did see yields fall after we heard from the US Federal Reserve. We've got the minutes out from their latest meeting, and it was an interesting one that saw a lot of market movement. What were your key takeouts? Yeah,
interesting session in the US overnight. So essentially we had the minutes of the FOMC, or the Fed Reserve meeting back in March, released. That was a meeting after which the new chairman, Yellen, suggested that she would see US interest rates moving up around 6 months after the end of tapering. And that's why markets started to build in US interest rates going up mid-2015. The minutes have come out, people have done their analysis, and they believe that they're not quite matching Yellen's comments, and so they've pushed that expectation out further into late 2015. So we saw a significant drop-off in the shorter end of the US Treasury curve. The 5-year, which actually reached a peak of 1.8% earlier this week, dropped off almost 20 basis points to about 1.63. So that was some interesting movement, and obviously quite a bit of a revision there of expectations.
And Simon, just finally and quickly, we've got Greece about to return to the debt markets with an issue of 5-year bonds.
That's right. So after 4 years, the Greece Ministry of Finance has suggested that they've placing order to issue some new 5-year bonds. No indications on volume. Could be around about $2 billion, but obviously that's a positive sign. Seen a significant drop in rates over in Greece, so they're obviously comfortable that the market is now ready to take some exposure of their improving economy.
Fantastic. Simon Michell from FIIG Securities. Thanks as always for checking in with us, Simon.
Thank you, Kate. Good morning.